The market flashed a rare but very powerful signal that we haven't seen since June of 2020. Keep watching, we'll go over what that signal was and how you can take advantage of it. What's up guys, it's Brandon from Amphibian Trading, and so far 2023 is off to a good start if you are a bull. Before we dive into this week's video, make sure you hit that like and subscribe button so you don't miss any future market updates. With that said, let's get right into it. So this week on Thursday, we saw a rare signal known as Breakaway Momentum, or a Walter Deemer Breadth Thrust. This signal has only happened 25 times since 1945 and on average has led to a 20% gain in the S&P a year later. So this signal occurs when the 10-day ratio of total advances to declines on the NYSE is greater than 1.97. So as you can see here on this chart of the S&P, Thursday that ratio hit 2.14, which is well above the 1.97 threshold needed to achieve breakaway momentum. If you want to put this on a chart and have a look at it yourself, I'll put a link in the description for the TradingView indicator. But now let's go back and look at some previous times that this signal occurred. First, let's look at June of 2020. You can see we got breakaway momentum, then had a slight pullback before the market went up just about 15% in 90 days. Let's keep going back further. This time, January of 2019. We have our breakaway momentum, and then the market moves up again about 15%, this time in 4 months. All right, let's take a look at one more back in 2009, and this actually occurred 3 times that year. Once in March, then again in July and September, each one of those producing nice returns. Now that we've taken a look at some past examples of that breadth thrust, let's go ahead now and get back to the current market where we've seen some really positive action. To start, both the market signal and the net highs and lows portion of the market stoplight indicator are green, signifying that price is over a rising 21-day exponential moving average, and we've had at least a 3-day streak of net highs. On top of that, the 50-day moving average, which is the red line on the chart, has started trending up and price is back above the 200-day moving average, which has been a strong resistance area all throughout 2022. So we'll see if that can finally flip to support. However, price is sitting just below this downtrend line from the top where it's been rejected multiple times. So we'll have to see if this is the time we can finally break through it. Personally, I think the market moves higher from here. We have the breakaway momentum signal. We're seeing positive price action in the indexes and leading stocks. The dollar, interest rates, and the VIX continue to move lower. The VIX closed right near a 52-week low today, and breadth has been improving dramatically. If we look at the market back in the last half of 2021, we saw a major divergence between the indexes and the number of individual stocks that were participating in the rally. This chart shows the S&P 500 on top and then the percentage of stocks above their 50-day moving average, and on the bottom, the percentage of stocks above their 200-day moving average. You can see that as the S&P moved higher, less and less stocks participated. The number of stocks above the 50-day never got above that left side high, and the percentage of stocks below their 200-day moving average was steadily declining. Now, if we fast forward to today, we have the opposite. From the S&P's low in June to the low in October, the market had fallen, but the percentage of stocks above both the 50-day and the 200-day moving averages actually increased slightly, showing a positive divergence. Okay, we've gone over a lot of detail about the indexes, so let's quickly now take a look at some individual names. First up is Lattice Semiconductor, LSCC. This one had a powerful move higher on heavy volume, and now it's forming a nice cup-shaped base with its relative strength line at new highs. Volumes dried up as the base is forming, and if we go into the daily chart, you can see that same base and price is getting right up near that left side high. So ideally, this will form a handle area here. Otherwise, I'll be watching this to break out of the left side high with heavy volume showing accumulation. Let's go ahead now and take a look at Impinj, PI. This one I mentioned last week as having the potential for a fast move higher if it pushed through this trend line after it failed to break down from a head and shoulders pattern. Monday came out strong right off the bat, and then Tuesday after the close, they actually raised revenue guidance, and that caused a big gap up on Wednesday. However, it did stall right below the all-time highs, and if we flip to the weekly chart, you can see we actually have a nice cup base now, and the relative strength line is at new highs as well. So there are two scenarios I'll be watching for here. Number one, this goes and breaks out of the cup with heavy volume, or my preferred scenario, it spends a few days drifting downward, maybe retest those moving averages, digesting the recent gains from this week, and forms a nice handle area to make this a cup with handle base. Next up is Insulet Corp PODD. This one's forming a very nice double bottom base that you could also view as a flat base since it's only 13% deep. But looking at this, you ran up very quickly, 53% in just 3 weeks. So this 13% deep base is very shallow. Volumes dried up as the base is formed, and there's nice tight weekly closes on both the left side and the right side of this base, which you can see with those blue highlights. I'll be watching this one to push through that middle peak of the base at $316.44 with heavy volume. Okay, the last one for today is Valaris VAL. This one broke out of a very nice cup with handle base this week on increasing volume, exactly what you want to see. We've also got the relative strength line at new highs, and if you look at this on the daily chart, you can see this not only broke out from the handle area, but this also got above the left side high of the base. However, this has gone up 7 days in a row, so I'll be watching this for a pullback towards that 21 exponential moving average as a spot to potentially pick up shares. So again, at this point, I do expect the market to move higher. It's critical to focus on leading stocks near their highs, forming proper basing patterns. If this rally is going to stick, we want to see breakouts start to work and constructive pullbacks to moving averages that find support. Thank you for watching. If you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button so you don't miss any future updates.